Well, if you just look at the data, wage growth over the last year in real terms from last May to this May has been zero, 0.0 from last May to this May. So nominal, wages have grown up a little bit in nominal terms, but that growth has been entirely eaten up by the rise in prices, gas prices, healthcare, whatever else. And so we absolutely are not seeing any rise in real wages yet. Now, it's possible, of course, he talked about that we're seeing an explosion in business investment, and in theory, over time, if there is a huge explosion of business investment and workers become so productive and they find a way to share or to bargain for wages where they share in the fruits of that increased production, which they haven't yet, they could see a wage increase, but we certainly haven't seen it yet. And we're not seeing any kind of explosion in business investment. In the first quarter, there was a slight uptick, but it was less than we saw in the first quarter last year, and we're not even at the levels that we saw in capital investment that we saw from 2012 to 2014. So, obviously it's early, but the early returns are not very promising.
Carolina, I want to get you in the conversation here and have you respond to this. Much of the return of the tax breaks have gone to investors, to companies that have been able to do buybacks, to shareholders. What about workers and everyday Americans how
Sure, so I would actually, a stock buyback is a way to distribute retained earnings. So I think it's true that, that is, for years we had people complaining about the fact that corporations were hoarding cash. Now we have people complaining about how they're distributing that cash to shareholders. So, okay, but I think the reality here is that the money that is going back to shareholders, when companies do stock buybacks, they see an increase in stock price, they see an increase in stock value. That value goes to the 50% of Americans who hold stock. That value goes to the $4 and $10 of market investment that is held in retirement plans. So to me, starting just the premise of your question, stock buybacks that benefit 50% of Americans and retirees ultimately over time are not a bad thing.
Yeah, Chris.
The stock, but when the tax bill when they were talking about it, employers were coming out saying that they were going to give a $4,000 wage increase. That just has not happened. It's not on the horizon to happen. We've seen, and they were going to increase jobs. We've seen jobs, for instance, one of our employers, AT&T, where we have about 110,000 people, said they were going to increase jobs by 7,000 jobs for every $1 billion in tax cut. Well, they got a $3 billion tax cut, and we've seen 6,000 layoffs since the tax cut happened.
Yeah, the Communication Workers of America and some other of the nation's largest labor groups have asked for details from companies about just exactly what is happening. How are they using the gains from the tax cuts? What have you found out so far?
Absolutely nothing. They've refused to kind of tell us so far. We're filing charges with the NLRB where we're in contract negotiations, for instance, with AT&T, with American Airlines, because by law they have to tell us what's happened with that money, and they've refused so far to do it. We pretty much know what's happened with it. It's all stock buybacks and bonuses to CEOs.
I want to give Carolina a chance to respond.
Sure, I would just say that, look, in the wage space, I think the reality is this. Wages languished for 8 years under the Obama administration. We see wages, as Kevin Hassett hit on. I'll disagree and look at nominal wages. We see them improving in the past year since this administration came in, largely due to deregulation. Now they are continuing to improve as tax reform works its way through the economy. I would caution everyone today, we are 6 months into tax reform. We have had 31 years of this tax code deteriorating, so I think it's key to give tax reform a little bit longer to work its way through the economy. That said, as it does, I would expect labor markets to constrict and to see worker wages rise. So I will take Kevin Hassett's approach to the issue.